Hey everybody, this is Rudy for Best Your Investor, or otherwise, as you know me by now, Mr. Oxy. What we're going to do in this video is talk a little bit about uranium. Because I don't know much about uranium, I'm going to create a quick introduction here, and I'm going to read a little bit if that's okay with you. But I do want to just set the background in terms of why we're talking about uranium to begin with. It's a fuel that enables nuclear power plants to generate electricity. Now, one single uranium pellet, which is only about the size or slightly larger than a pencil eraser, contains the energy of a ton of coal, 3 barrels of oil, or 17,000 cubic feet of natural gas. Demand for the commodity is largely driven by the global nuclear power output. Miners worldwide extract about 60,000 metric tons of uranium annually. The quest for cleaner, more environmentally friendly fuels has propelled the growth of the nuclear industry in electricity generation. As a result, uranium has become an increasingly valuable commodity in world markets. The current annual global consumption is about 190 million pounds, but the annual global mine production is only about 140 million pounds, resulting in a 50 million pound deficit. Uranium prices have declined consistently from 2011 to 2017, owing mainly to a supply glut caused by the delayed Japanese reactor starts. Yet, because most uranium is transacted through long-term contracts negotiated years in advance, a disconnect between realized and spot prices makes it appear that lower prices are sufficient. So what I'm going to do is I'm going to share with you sort of a simple trading philosophy. I'm going to talk a little bit about the stocks that I had taken a little position in. I had mentioned that I'm going to take a whirl at some of the stocks that I had discussed in a previous video with you. I'm going to tell you about some of those. The other thing I wanted to say is, if there's a book that you should really read, it's this one. It's called One Up on Wall Street by Peter Lynch. In his book, I'm just going to page briefly to page 15. He says, in a small portfolio, even one remarkable performer can transform a lost cause into a profitable one. It's amazing how this works. And then what he does on page 16, if you're able to get this book, he gives you a sort of model portfolio. And by the way, my book is old. These pages are like all yellow. And I've read this book a few times already, but he gives you a portfolio example with 11 stocks. And he says to make this spectacular showing, you only had to find one big winner out of 11. The more right you are about any one stock, the more wrong you can be on all the others and still triumph as an investor. What I want to share with you today is that this is not rocket science. What we're going to do is I'm going to share with you a very simple strategy and walk you through what I've done with 5 different energy stocks. Most of them sort of lean towards nuclear or uranium, but I'm going to kind of share with you how that works, and then I'm going to share with you a very simple strategy as to how you can create a portfolio that's going to end up being a winner for you in all likelihood.
This is what you came for. Oh, this is what you came for. I'm over. This is what you came for. I'm on. This is me. She said, I'm ready. So come and get me. I'm over here. I'm over here.
All right, guys, let's take it away. So I shared with you in the introduction that I've invested in 5 different energy stocks. And what we're going to do right now is kind of take a quick look at what these stocks are and what they look like and why I would invest in them at all. And then I'm going to share with you a very quick strategy using Peter Lynch's example in the book that I just shared with you. Which, by the way, I do suggest you should get and read. You can probably buy it quite inexpensively on Amazon or something like that, because the book has been around for quite a number of years. So anyway, very, very briefly, Antero Resources is my first pick. It's ticker symbol on the New York Stock Exchange, AR. It's currently trading at about $5. It's a $1.4 billion company. It's an oil and natural gas company engaged in exploration, development, and acquisition of natural gas natural gas liquids, and oil properties located in the Appalachian Basin. The second one that I am invested in is called Energy Fuels. The ticker symbol, once again, on the New York Stock Exchange is UUUU. Thank you very much for this one, Luke at Thinly Spread. If you want to follow Luke on Twitter, at Thinly Spread is his handle. And by the way, while I'm talking about Twitter and people, so on Twitter, Contrarian quadruple 8, so Contrarian 8888 is one of the guys who had mentioned Antero Resources to me, ticker symbol AR. Luke had mentioned Energy Fuels to me with ticker symbol UUUU, 4 U's. Trading at around $3 a share, it's a $470 million company. Energy Fuels is engaged in conventional and in situ uranium extraction and recovery, along with the exploration, permitting, and evaluation of uranium properties in the United States. The next one, which might also be one of Luke from Thinly Spread's favorite. I know there are quite a number of people who have been active on Twitter talking about this one, is Paladin Energy out of Australia, trading at around $15 per share. This is 21 because obviously it's trading on the pink sheets. $426 million company. Paladin Energy is a uranium production company engaged in the development and operation of uranium mines in Africa, together with exploration and evaluation activities in Africa, Australia, and Canada. The next one is GoVX Uranium. This one is over the counter. So OTC at the top there means over the counter. My US ticker symbol for this one is GVXXF. GoVX Uranium is a mineral resources and exploration stage company. The company is focused on evaluation and development of uranium properties located in the Republic of Niger. And the last one is Cameco. Cameco I actually know from a few years back. It's a Calgary-based company, Calgary, Canada, trading at around $13 a share. It's a $5.2 billion company. Cameco is a uranium producer with operating segments that include uranium and full services. The uranium segment involves the exploration for, the mining, milling, purchase, and sale of uranium concentrate. So, guys, those are my 5 stocks that I am invested in and what I want to share with you as a potential trading strategy that pretty much anyone can follow. And you don't have to even do this with energy or uranium. You can do this with anything. You could say, for instance, I'm going to pick a few retail stocks, and then you can select a number of energy stocks, or you can create your own little index of pharmaceutical stocks. Even if you take big ones, you select a few large pharmaceutical companies: Johnson & Johnson, Pfizer, Merck, Abbott, GlaxoSmithKline, or whatever. You make a little index of 5. And I'm going to show you sort of how that might work for you in just a minute. All right, guys, for this last segment here, I'm just going to use my trusty old blackboard to illustrate my point. And what I've done is using the Peter Lynch strategy that I just shared with you a minute ago from his book, One Up on Wall Street, that I really recommend you read. What you can do is you can create a simple index for yourself. So I've just called my 5 stocks here A, B, C, D, and E, and I've invested the same amount of money into all of these stocks in year 0. So in other words, that is like sort of today. Now, it doesn't matter whether this is $100, $10,000, $10 million, or whatever the case might be, and it doesn't matter what the stock price is for the particular ticker. I've invested an equal amount of money in all 5 of these stocks. And what I've done here, just sort of to prep the blackboard, is I've assumed after sort of a year or whatever that I've been in this position, this company is almost a goner. I invested, say, $10,000 in it. Now the stock's worth $2,000. I've lost 80% of my investment. These 2 guys, B and C, are kind of going nowhere. I invested $10,000. They're still hovering there or thereabouts. They don't even pay a dividend, so they're just at $10, and they're kind of stuck. This one's lost 20%, so I put $10,000 into it. It's now trading at $8,000, so I'm down 20%. But I have one stock, and this has so far given me a 3-bagger because I put $10,000 into it. Now one's currently trading at $30,000. So what I have here is basically 4 losers, 1 winner, and my portfolio has moved from $50,000 to $60,000. But how about 1 year later, or whatever your time frame is? Maybe it's 3 or 5 years, or whatever the case might be. This guy's gone away. This company's actually gone bankrupt, so it's finished, it's gone, and that's the end of that. This one finally gave you a little bit of traction. It's up 20%, and instead of being worth $10,000, it's now worth $12,000, although it is 2 years later. This one has still gone nowhere at all, and it's still worth $10,000, even after being in the position for almost 3 years. This one's recovered just a little bit, and instead of giving you $8,000, it is now worth $9,000. And my 3-bagger has turned into a 10-bagger. So I left myself a slightly complicated mathematical sum here, because 10 plus 10 is 110, plus another 12 is 122, plus 9 is 131,000, which means my original investment of $50,000 has grown to $131,000. So I'm kind of up in the region of, so 50 plus 50 would be 100 plus another 30. So I'm kind of up quite a significant amount of money on my original investment, only because I have one stock E in this example that turned into a 10-bagger. The rest of them are all basically losers or going nowhere, but it doesn't matter because I still come out a winner because I managed to pick just one winner. That is the philosophy that Peter Lynch was sharing with us in his book, One Up on Wall Street, which I have now on 2 occasions during this video suggested you take some time to read. So guys, there you have it. I hope it was helpful. It's a simple trading philosophy, but at the end of the day, it's not rocket science on the stock exchange if you want to make money in the markets. This is the book that I had suggested you take some time to read, One Up on Wall Street by Peter Lynch. This book was published like in the, I don't know, at least 30 years ago. Anyway, it's a good read. It just shows you that you don't have to be an absolute market genius in order to make money in the market. You just need to have a good strategy and execute properly. So on that happy note, this is Rudy for Best Your Investor signing off. Please remember to subscribe if you haven't done so yet. Stay safe, take care, and until next time, I'll see you soon.